Hello traders and welcome, and thank you for joining us for XNES's educational video on how to find trends without using indicators. The most basic technique, regardless whether you're using indicators or not using them, to find a trend is just to count the number of new highs and lows. If you can find 3 or more new highs on a relatively higher time frame, such as 4 hour, daily, or even weekly for that matter, you probably have an uptrend that you could buy into. Whereas if you can count 3 or more new lows on equivalent time frames, you probably have a downtrend into which you might be able to sell. That's the most basic approach. It's used regardless whether you have indicators or you don't. But equally, if you're not using any indicators at all, certainly there's more emphasis on patterns, mainly traditional patterns. These are generally the most reliable type of pattern, but also patterns of candlesticks in certain specific contexts can be very useful. So here we're looking at the daily chart of gold against the US dollar, and if we were considering here selling in, which is perhaps questionable, what we can do is just count the number of new lows. So if we take as our starting point, which is roughly the start of June, we can find 1, 2, 3, 4 new lows. So possibly we have a downtrend into which we can sell. We should also want to consider patterns. For example, if we're looking at the recovery here from the low, it seems to be forming a fairly weakly defined rising wedge, although it is quite strongly rising. Typically, traders would expect on the completion of this pattern for losses to resume much of the time. Combining these two approaches is really key. If you're choosing not to use any indicators when trading and trying to find trends, in addition to comparing patterns with the number of new highs and lows, it's also really important to consider fundamentals and sentiment, because economic data and the sentiment of participants in markets are both really crucial factors that can drive trends and determine prices. So the best and most basic approach to find a trend is just to count the number of new highs and lows. If you've got 3 or more, you might have a trend. And it's also important to combine this with looking at traditional patterns of candlesticks, and don't forget the context. Try to combine and compare signals whenever you can. Thank you traders for joining us for this educational video from XNES on finding trends without using any indicators. If you found it informative, we hope you might continue to watch our other videos as well.